Hey, Mark, good to see you. This one, by popular demand, we're talking about stablecoin today, whether it's safe. The US Treasury recently released a 23-page report on stablecoins. These cryptos include Tether, USD Coin, Binance USD. It's ballooned 500% with a market cap now of 130 billion over the past year. Start at the beginning. What is stablecoin?
So in the beginning, Bitcoin was launched as the original cryptocurrency. Now, the technology underlying Bitcoin is called blockchain technology. So Bitcoin moves around, the cryptocurrency moves around very wildly in value. But there were other use cases to blockchain and other applications. And I think stablecoin is that next level or another application of the underlying technology as a means of payment and a different type of network where Bitcoin is more of a store of value or an investment vehicle. Now you have stablecoin, which the idea was to have an asset that ran on the technology, but that wasn't as volatile as Bitcoin. So now you have stable coins, which basically tie their value to the value of an underlying fiat currency. Usually, and most popular, is the US dollar. So it doesn't move around relative to the US dollar. And the idea is that it stays tethered, which is one of the names of one of the stable coins.
That it stays stable, right? I want to just continue on the Bitcoin wagon right now. You've said before I shouldn't consider Bitcoin currency, but rather the currency of a network. But stablecoin's ultimate intention here is that I will ostensibly be able to go out and buy that cup of coffee, buy a haircut, right?
It is. So with Bitcoin, you had a pretty unique kind of evolution of creation. And what you had was it was the first global, and this is an important point of this, being able to move around assets or value globally without the banking system and some of the old legacy systems that were built many, many years ago or decades ago. Now this is kind of trying to build the technology to underpin a digital economy and going forward. So they're rewriting some of the language here, and the regulations are trying to get caught up. But one of the the value proposition for Bitcoin was it's global, decentralized, and it's a scarce asset. And so decentralized, meaning no one necessarily controls it. It works outside the system and it's all digital. And so stable coins have come along and say, we like some of those value propositions, but we want to make it a lot easier for people to use as a value or a transmittance of value.
Okay, now you've said it is, a fiat currency. Fiat money is more susceptible to inflation, which is on everybody's mind today. So, do you see stable coins being affected by inflation?
Definitely. So their value is tied to the value of the underlying asset, whatever that asset happens to be. So the US dollar, as I mentioned, so it's tied directly to the dollar. So to the extent that inflation is rising, then the value from a purchasing power perspective of that stable coin is declining. And so that's really a little differentiation from Bitcoin, which the idea is, well, it's a scarce asset. If there's inflation or if the value of the currency is declining, maybe you own it because it might be rising in price, or one of those securities that has properties that actually will accrue during an inflationary period.
So, is there a bigger takeaway then if that reserve asset loses value?
Sure. So think of it as it's trying to be a currency and fulfilling a different use case. And this is what I think is interesting with the digital economy at this time, or the ecosystem, is that there are different applications to that technology. And so this is something we're keeping our eye on.
All right. So, Mark, I wanted to show you this graph, which I talked about at the beginning here. If you take a look at top stablecoins by market cap, again, I mean, it's just huge. You can understand why the US Treasury wants to know more about it. But they specifically are asking Congress to assess whether these digital assets pose a systemic risk to the US financial system. Do you think they do?
Well, I don't think they pose a systemic risk, but I do think they pose risk because no one's really overseeing whether that stablecoin is actually backed by, so as many stable coins as they should produce in the equivalent amount of dollars, or accumulate the equivalent amount of dollars. And in fact, a couple of these have gotten into trouble where they did not have enough to back that stable coin. In other words, if you have one stable coin, one unit, you should have $1 backing that if you're backed by the tethering, let's say, or to the US dollar. So some of them didn't have the dollars, and how would you know? And so from a consumer protection standpoint, that's one of the challenges. And that's where the regulators are saying, well, we think we should regulate this because of what it's trying to do, which is different again than Bitcoin, which is really considered property and taxed as such and regulated as such at this point, even though it's early days. These are fulfilling a different proposition, and they're also putting themselves out there as stable and backed by the dollar. But it may not have those dollars underneath that. So you could see a scenario where where they lose value. And so that's one of the risks that I think the regulators, and rightly so, want to take a look at.
So just lay it out for me. Is it insured like my bank deposit?
It's not. And so that was part of the report saying, well, if we provide oversight, we could provide insurance to that if it's necessary and if it falls under US regulations. And as I mentioned before, a lot of this has to do with international payments as well, not going through the banking system. And the reason they want to use it for international payments is it can be a lot faster and cheaper to transmit that value on these new rails.
Okay. Now, when I hear Bitcoin, I think a lot of people think, okay, well, this is an investment. I've just seen it skyrocket, right? Is stablecoin an investment opportunity, or is this simply about, again, just another form of payment?
It's not an investment. It's another form of payment. So again, it's a different use case. And that's where when you hear the term cryptocurrency or what's happening, there are a lot of different use cases. Some are good, some are not. And so these definitely have different use cases. And it's actually breaking up what is traditionally considered what a currency is, which is a medium of exchange, a store of value, and a unit of account. And so Bitcoin is trying to be the store of value over a long period of time, whereas the stable coin is trying to be a medium of exchange.
Okay. Is this the first step toward a US digital currency?
I think it is. I think they're looking at this and saying, wow, there's really a market here for whatever reason that we should address and having the US back it, having the insurance behind it. So I definitely think they're taking a look at this and taking a serious look at how do they implement it. And the issue is, are they going to be private transactions? Is there going to be a lot of oversight on the transactions? And I think that's what they want to figure out. But I think it's all for the better and really adapting and adjusting to what we continue to see. And I think what the world is moving to is more and more digitization.
Right. Because when you and I were just chatting, one of your takeaways was that you were surprised by how much interest there is in stable coins.
Yeah, definitely. Considering that we do have the US dollar and it is a stable coin in a sense, and it's mostly digital, but there's clearly a market for what's happening with stable coins.
All right. Mark, thank you.
Great. Thanks, Erin.